Welcome back to Algobot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host from Algobot, and today we're exploring an expert advisor called Engulfing Pivot Hedge. This is a pure price action system, which means it uses no traditional indicators at all. Instead, it builds its own pivot framework from recent price, and it reacts to candlestick patterns at key support and resistance. By the end of this video, you'll understand how it spots reversals, how it rides breakouts, and how its hedge logic is designed to manage risk. Remember, everything here is educational information only and not financial advice. So what exactly does the Engulfing Pivot Hedge expert advisor do? At its core, it's a price action strategy, which means it makes decisions purely from the open, high, low, and close of recent candles. There are no moving averages, no oscillators, and no external indicators involved. Everything it needs, it calculates itself from the raw price data on your chart. The first thing the strategy builds is a rolling pivot framework. Using a configurable look-back window, 20 bars by default, it finds the highest high and the lowest low of the recent range, then derives three reference levels: a central pivot, a resistance level above it called R1, and a support level below it called S1. These levels act as the map for everything that follows. From there, the strategy looks for two very different kinds of opportunity. The first is a reversal. When price reaches the support zone and forms a bullish engulfing candle or a bullish pin bar, the strategy reads that as buyers stepping in, and it signals along. The mirror image happens at resistance, where a bearish engulfing or a bearish pin bar signals a short. The second opportunity is a breakout. When a strong-bodied candle closes decisively beyond resistance or below support, the strategy treats that as an expansion move and trades in the direction of the break. Finally, there's the hedge component that gives the strategy its name. If a primary trade moves against the position by a set distance, a separate opposite trade can open to help cap the drawdown. This kind of approach may appeal to traders who are studying support and resistance, candlestick patterns, and risk management. It can be applied to any symbol and time frame you attach it to. As always, this is for educational purposes only and not a recommendation to trade. Let's walk through the mechanics step by step. On every new bar, the expert advisor first checks that it has enough price history to work with. It then rebuilds its pivot levels. It scans the look-back window for the highest high and the lowest low, and it averages the last 14 bar ranges to produce what the code calls a range proxy. This range proxy is important because it's used to size almost everything: the width of the trading zones, the stop loss, the take profit, and the hedge trigger distance. With the pivots in place, the strategy measures how close the most recently closed candle came to its key levels. If the candle's low is within a defined zone around support or the central pivot, the area is marked as near support. If the candle's high is within that zone around resistance or the pivot, it's marked as near resistance. The zone width is a fraction of the range proxy, so it automatically widens in volatile conditions and tightens in quiet ones. Now the entry logic. For a long reversal, the strategy needs two things together: a bullish engulfing pattern or a bullish pin bar, and that near support condition. When both line up, it signals a buy. For a short reversal, it needs a bearish engulfing or bearish pin bar combined with the near resistance condition. The breakout path is separate. If a candle closes above resistance by more than the zone distance, and its body is strong, meaning at least half the candle's total range, the strategy signals a long breakout. The same logic in reverse: closing below support signals a short breakout. Once a trade is open, the exits are mechanical. The stop loss is placed at the entry price, offset by the stop multiplier times the range, and the take profit at the take profit multiplier times the range. By default, that's a 1 times range stop and a 1.5 times range target, giving a reward to risk ratio of 1.5 to 1. Only one primary trade runs at a time. And if that trade drifts adversely by the hedge trigger distance, the opposite hedge leg opens with its own magic number, sized by the hedge multiplier. Every condition is checked from the candles themselves, with no external data required. Let's look at the actual MQL5 code running inside the expert advisor. At the top are the inputs you can adjust in the strategy settings. PivotLookback sets how many closed bars build the pivot framework, 20 by default. RangePeriod set to 14, controls the range averaging. ZoneFrac defines how wide the reaction zones are as a fraction of that range. SL range multiple and T per range multiple size the stop loss and take profit, while hedge trigger, hedge multiple, and lots govern the hedge distance, the hedge size, and the base volume. Below the inputs are the signal lines. The Boolean called bull rev is true when a bullish engulfing or a bullish pin bar appears and price is near support. The bear rev Boolean is its mirror, a bearish engulfing or bearish pin bar near resistance. Then bull break and bear break handle the breakout case, true when a strong-bodied candle closes beyond the level by more than the zone. Now the decision. If bull rev or bull break is true, the code calls open trade with the long flag set. If instead bear rev or bear break is true, it calls open trade with the short flag. Inside open trade, you can see how each side is built. For a long, it takes the ask price and calls trade.buy, placing the stop below the price and the target above it. For a short, it takes the bid price and calls trade.sell, placing the stop above and the target below. Both stops and targets are sized from that same range proxy, so the trade adapts to current volatility. It's compact, readable, and entirely driven by price. Let's bring this to life on a chart. On screen, you can see a candlestick sequence with 3 horizontal reference lines from the strategy's pivot framework. Near the top sits resistance R1 at 1.0895. In the middle is the central pivot P at 1.0862. And along the bottom runs support S1 at 1.0830. These 3 levels are calculated from the recent 20-bar window, and they frame everything the strategy is about to do. Watch the opening candles. Price is drifting lower, candle after candle, sliding down from the pivot toward the support line. This is exactly the kind of approach the strategy is waiting for. It doesn't chase the move down. It watches to see whether buyers defend the support zone. As the third and fourth candles print, price reaches down and taps support S1 at 1.0830, the lower reference line. Now look closely at the reversal candle. After a small down candle, the next candle opens lower but then closes strongly higher, completely engulfing the previous candle's body. That's a bullish engulfing pattern, and crucially, it's forming right at the support zone. Both of the strategy's conditions are now satisfied, a bullish pattern and price near support. On the open of the following candle, you'll see the buy entry marker appear. The stop loss sits below the support line at a distance set by the range proxy, and the take profit is projected above 1.5 times that range away. From there, follow the move. The next 2 candles push higher with rising closes, carrying price up off support and back through the pivot. Buyers are in control, and the move extends toward the resistance line. When price reaches the projected target, the take profit marker is hit, and the long trade closes for a gain in this illustration. Notice the reward was larger than the risk, that 1.5 to 1 ratio in action. But the chart isn't done. Price keeps pressing higher and now approaches resistance R1 at 1.0895, the upper reference line. A small candle stalls right at that level. Then the very next candle opens higher and closes sharply lower, engulfing the prior candle's body. That's a bearish engulfing pattern, forming exactly at resistance. Again, 2 conditions align, a bearish reversal pattern and price near resistance. On the next candle's open, the sell entry marker appears. This time the stop loss is placed above the resistance line, and the take profit is projected downward by the same range-based distance. Watch the short play out. The candles roll over, printing lower highs and lower closes as price retreats from resistance back toward the pivot. The move carries down with steady momentum until price reaches the downside target, and the take profit marker for the short is hit. The trade closes in this educational example with the target reached. What you've just seen is the strategy's core idea in 2 directions. At support, a bullish pattern signals a long toward a higher target. At resistance, a bearish pattern signals a short toward a lower target. Every stop and every target is measured from that same 14-bar range proxy, so the trades automatically scale to how much the market is moving. And if either trade had instead run against the position by the hedge trigger distance, the opposite hedge leg would have opened to help limit the drawdown. Remember, these are clean, illustrative moves. Real markets are far messier, and losses are a normal part of trading. And that brings us to the end of our breakdown of the Engulfing Pivot Hedge Expert Advisor. We covered how it builds its own pivot framework from recent price, how it trades both reversals at support and resistance and breakouts beyond those levels, how it sizes every stop and target from a range proxy, and how its hedge leg is designed to manage an adverse move. Everything we discussed today is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading carries real risk, and losses do happen. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to explore next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.